I would also point out to you that $44 silver in historic terms is understated because we're talking about nominal terms. If you look about what the U.S. dollar buys, if you were to adjust the numerator, the U.S. dollar, back to the last time that silver was at $50, my suspicion is that it would take $125 silver to mark a real as opposed to a nominal high. And I think people need to understand that, which is to say 44 US dollars is not the same today as 44 US dollars was at the time of the last high in 2011. As a speculator, I'm more bullish on silver. I need to say I own gold as a store of wealth. I actually save in gold. I maintain liquidity in dollars. Silver's different. Silver's a speculation. My experience has been that sort of midway through a precious metals bull market, when the generalist investor is attracted to gold's momentum and the precious metals narrative, and he or she comes down into the precious metals space, silver tends to outperform gold. And silver's performance in the last 3 weeks would suggest that we may be at that moment. The trader in me, which is a small part of who I am, tells me that silver may actually break out in October. If it doesn't, I think it's a matter of time. I remember well prior bull markets where I was attracted to the gold move and I was astounded by the silver move. And I expect that past is prologue. The asset class that has likely the most upside is that very, very, very small club of high-quality silver equities. The combined market cap, and I'm not talking about all the little nothing, nowhere silver companies that don't happen to have any silver. They're just looking for it. I'm talking about the ones that actually have some silver. Their combined market caps aren't large enough to handle the amount of capital that's going to come into them. I remember very well as a young man in the decade of the 70s, the shares of one penny dreadful, Coeur d'Alene, went from 10 cents to $65 in 10 years. Sadly, I was too inexperienced and too poor to take advantage of it. But the next silver bull market, we financed Pan American at 50 cents and Silver Standard at 72 cents, both of which 5 or 6 years later were $40 stocks. The upside in these things, when the stars align, is insane, truly insane.
So, I mean, we've seen this big run. Silver is at the highest level since 2011. And from there, kind of peaked out at this price and then spent years kind of going down. But it sounds like you're saying you're watching to see if it breaks above that. And if it does that, maybe that makes new highs. We got a couple of questions on your favorite silver developers on the Canadian exchange. Do you have a favorite?
I don't have a favorite, but I can tell you that I own New Pacific, which isn't a developer, it's an explorer. And I also need to say it exposes you to a lot of political risk. It's in Bolivia.
Okay.
I own Vizsla Silver, I own Abra Silver, and I own Aya Silver. Those are, the last three at least, are all post-discovery companies with established reserves and resources that are, I think, strongly economic at today's silver prices and are 100% guaranteed to attract the construction financing that they need to build their mines. This is the least speculative aspect of a speculative portfolio, and they are the ones I own.
So, on that nature of playing it safe in silver to the extent that you can, we got a question from Adam. Pure play silvers, they're great. The reward is high, but so is the risk. In your mind, is there a silver play miner that's not a pure silver miner, like a Pan American, Agnico, Discovery, any other miner that you think can capture some silver upside?
Well, you asked me the question earlier about developers. If you're talking about silver-centric companies, there are many more in my portfolio. The highest quality is Wheaton Precious. The second highest quality is Pan American, which gets most of their revenue from gold. There's a silver company in drag on the Canadian exchange, Go Gold, which I quite like. It is a developer and it is silver-centric. Constructing a real silver portfolio involves moving out of Canada. The big names there would be Buenaventura, which trades on London but is a Peruvian company, or Fresnillo, the highest quality silver company silver deposit in the world, which is in turn controlled by another name that silver-centric investors should consider, called Peñoles. Those companies involve understanding something about the political risks in both Peru and Mexico, which, by the way, are not insubstantial.
I mean,
But if you are silver-centric rather than Canada-centric, you need to pay attention to those names.
I'll just take two that you mentioned, Wheaton Precious and Fresnillo, because they're so large. Silver's up, call it 50% so far in 2025. Wheaton Precious is a double. Fresnillo is a more than triple. Is that kind of the expected behavior because you've seen these cycles before? Sometimes these mining stocks can actually be slow to the commodity move, and that's not the case in 2025.
Certainly that's right. I would suggest to you that metals prices, both gold and silver began to move in 2022, but the margin expansion didn't begin. It's important to note in the silver business that say you're a $20 silver producer, and say the silver price goes from, let's say that it's at the beginning of the period that you're looking at, silver selling for $30, so you have a $10 margin. When the silver price goes to 40, an increase in the silver price of 25%, your margin doubles. And that's the sort of leverage that's inherent. Well, actually, it's not that crowded a trade. The anti-US dollar trade is a very crowded trade, but the gold trade is surprisingly uncrowded. We have seen a real increase in the gold price, largely due to foreign central bank buying. The flow of retail funds into gold, as measured by the ETFs, didn't really start until 20 weeks ago. JP Morgan Chase said as recently as 6 months ago that the market share of precious metals and precious metals-related securities is less than 0.5%, which is to suggest that gold occupies less than 0.5% of American portfolios. The 4-decade mean market share of precious metals is 2%. Should gold's market share revert to mean, that would suggest a 4-fold increase in interest. So while I take your point about the increase in the gold price, I would suggest to you that relative to other gold bull markets, we're in relatively early innings.
Let me begin with a point that I think too many people miss when they look at silver. Everyone's obsessed with the spot price. Silver's $44. It's up this much since January. It's the highest since 2011. But I'd point out to you that 44 silver, in historical terms, is actually understated. Why? Because we're talking about nominal terms. A dollar today doesn't buy what a dollar bought back in 2011, let alone in 1980. If you adjust silver's prior highs into real terms using a yardstick of purchasing power, my suspicion is that it would take about $125 silver today to mark a real all-time high, as opposed to a nominal one. So when people tell me silver is expensive, I laugh. Expensive compared to what? Compared to the US dollar, which loses value every year? No, $44 isn't expensive. $44 today is a bargain when you realize that the inflation-adjusted high is nearly triple digits. Now, I need to draw a distinction here between my own behavior with gold and my behavior with silver. Gold for me is a store of wealth. It's a form of savings outside the banking system. I own it not because I expect to get rich, but because I expect it to protect me from stupidity, my own and that of governments. I save in gold. I maintain liquidity in dollars because I have to pay bills. But I speculate in silver. Silver is not the same thing. Silver is volatile, it's cyclical, and it can deliver truly outsized returns if you're willing to stomach the ride. What's interesting now is that silver's performance in the last few weeks suggests we might be at one of those moments. In my experience, silver tends to lag in the early innings of a precious metals bull market. Gold moves first, attracting generalist investors. Then about midway through, those generalists start looking down the ladder. They see silver, they hear the narrative, and they pile in. That's when silver outperforms gold. And I think we're approaching that moment again. The trader in me, a small part of who I am, but still there, tells me silver may actually break out this fall. October is often an interesting month for markets, and the technicals are lining up. If it doesn't happen in October, it's a matter of time, because I've lived through prior bull markets where I was initially excited by the gold move, only to be absolutely astounded by the magnitude of the silver move that followed. Let me give you some perspective. In the 1970s, a penny dreadful called Coeur d'Alene Mines went from 10 cents a share to $65 in a decade. That's a 600-fold increase. Sadly, I was too inexperienced and too broke to fully take advantage of it at the time. But I learned. Later, we financed Pan American Silver at 50 cents and Silver Standard at 72 cents. Within 5 or 6 years, both were $40 stocks. That's what I mean when I say the upside in this sector is insane. When the stars align, the moves are life-changing. So yes, silver is at the highest level since 2011. But I want you to think about this differently. Back then, it peaked around $50 and then spent years grinding lower. This time, the fundamentals are far stronger. The deficits are larger. Industrial demand is higher. Government stockpiles are gone. And sovereign nations are buyers, not sellers. So when silver finally breaks above that $50 line, the next move isn't going to be a whimper. It's going to be fireworks. Now, people often ask me about equities. Rick, what are your favorite silver developers? What about explorers? What about producers? I don't play favorites the way some folks want me to, but I'll tell you what I own. I own New Pacific, which is an explorer in Bolivia, though I'll warn you, that comes with heavy political risk. I own Vizsla Silver, I own Abra Silver, and I own Aya Gold and Silver. Those three are all post-discovery companies with established reserves and resources. At today's silver prices, they're strongly economic, and more importantly, they are virtually guaranteed to attract the construction financing they need to build their mines. That's about as safe as it gets in a speculative sector. That's the key to constructing a silver portfolio. The least speculative part of your speculative allocation should be high-quality developers and producers. These are companies where the ore is real, the economics work, and financing is achievable. Everything else, the drill stories, the dreamers, are lottery tickets. Fun perhaps, but not where you should bet the ranch. Now, for those asking about big names, I'll say this. Wheaton Precious Metals is the highest quality company in the sector, period. Pan American is second. Those are the stalwarts. And if you're willing to look outside Canada, you'll find names like Buenaventura in Peru or Fresnillo in Mexico, which is arguably the highest quality silver deposit in the world. But, and this is critical, you must understand political risk. Peru and Mexico are not Canada. Their governments can change the rules overnight, and that can devastate an investment. Still, if you're silver-centric, you can't ignore them. The real silver comes out of places like Mexico and Peru. It always has. That's geology, not politics. Now let me address a question I get often. How do silver equities behave relative to the underlying commodity? This year is a great example. Silver's up around 50% so far in 2025. Wheaton Precious is a double. Fresnillo's a triple. That's leverage in action. Sometimes mining equities lag the commodity because costs are sticky. But once prices move enough to expand margins, the equities scream higher. Let's put numbers on it. Suppose you're a producer with $20 per ounce all-in costs. If silver's at $30, you've got a $10 margin. If silver rises to $40, a 33% increase, your margin doubles to $20. That's why equities can deliver multiples of the underlying metal's return. The leverage is extraordinary. Now, some people worry that the gold and silver trade is crowded. I don't see it. In fact, JP Morgan recently reported that precious metals and related securities make up less than half of 1% of U.S. investment portfolios. Half of 1%. The 40-year mean is 2%. If gold and silver merely revert to mean portfolio weighting, you're talking about a 4-fold increase in capital flows into the space. That's not crowded, that's under-owned. Think about that. We've seen a major increase in gold prices, driven largely by central bank buying. Retail flows into ETFs only began about 20 weeks ago. We are still early in this cycle, very early. Now let me lighten the mood with a bit of humor, because this stuff can get heavy. Someone on Twitter posted, "Silver stocks are like roller coasters." Great fun if you buckle up, but don't ride them after eating. They're not wrong. Volatility is the price of admission here. But volatility is also opportunity. If you can stomach the ride, the upside is remarkable. And remember, we're not even close to the public mania stage yet. When CNBC runs a silver segment every night, when your Uber driver tells you about the mining stock he just bought, That's when you'll know it's time to start selling into euphoria. We're nowhere near that. Right now, most investors still couldn't tell you the difference between Pan American and Panera Bread. So here's where I'll close part one. Silver is not just another commodity trade. It's a speculation with asymmetric upside. At $44, it's not expensive, it's cheap in real terms. Gold is the insurance, the store of value. Silver is the speculation. And silver equities, if chosen carefully, can deliver the kind of returns that make a career. We are still early. The public isn't here. The generalists are only beginning to trickle in. And the fundamentals, the deficits, the demand, the central bank behavior are more compelling than at any point in my lifetime. That's why, as cautious as I am, as disciplined as I am, I'm extraordinarily bullish on silver.